Welcome to chapter 14, lesson 14 of the financial literacy series. This lesson is, and this is a disclaimer, this lesson is for educational purposes only. It is not financial, legal, credit, tax, investment, or mental health advice. The goal is to help people understand interest rates, bad credit, predatory lending, savings, assets, social pressure, and long term financial decision making. Always research products, compare costs, read contracts, and speak with qualified professionals when needed. In the financial literacy playlist, we have talked about awareness, budgeting, emergency funds, debt, credit, interest, income, financial myths, vehicles, banking, disaster preparation, and the deeper psychology behind money decisions. And if this is the first video you are watching, baby, you have 13 other ones if you want to catch up to those that I just mentioned at your leisure and at your discretion because it's free will. Now we need to talk about something that is happening everywhere. People are being sold debt as opportunity. People are being sold trends as identity. People are being sold high interest loans as rescue. People are being sold products that lose value the moment the trend dies. People are starting to save but do not know how to make their money work harder. People are growing or trying to grow but still surrounded by influences that pull them back into old spending habits. This lesson is about interest rates, bad credit, predatory financing, social pressure, savings, assets, and the emotional difficulty of growing while maintaining relationships. Because prosperity is not just having more money, prosperity is pattern recognition, it is knowing what not to sign, it is knowing what not to finance. Prosperity is learning how to keep your relationships without letting their habits run your life. And prosperity is realizing something needs to change before the debt cycle becomes your identity. And also keep in mind that all of the videos, or at least 99% of them, have resources in the description related to the video and also bonus resources for mental health, financial health, housing. I even have a playlist that I will be adding to soon on blue collar jobs. It's to help. It's not just to, like, I know some people may feel shame in the videos, but that is not my intention. I am just someone who loves to read, not read people, like read for filth, but like reading books. I've always liked writing. I used to do poetry when I was younger, so I have a way with words. So it may hit a little deeper than the average person, but it's not my intentions. My intentions is for people to become more aware and be more empowered, because it's one thing to mention what's wrong in the world, but it's another thing to tell you how to combat what's wrong or to show you what is right. Nevertheless, chapter one, stop letting your future get sold back to you. Welcome back to the series, as if I wasn't just talking for all of that long time. Today we are talking about interest. I said that already. I don't like when it get redundant. My bad, y'all. This lesson is important because we are living in a time where everything can be financed: phones, clothes, furniture, cars, beauty, trips, electronics, appliances, concert tickets, food delivery, status, convenience, even insecurity. And when everything can be financed, people start confusing access with affordability. Just because you can get approved does not mean you can afford it. Just because the payment is small does not mean the total cost is wise. Just because everyone else is doing it does not mean it is normal prosperity. Sometimes the system does not need you to be wealthy. It only needs you to feel wealthy long enough to sign. And that's also why I include this, because one of the biggest traps people fall into is getting a better credit score and then falling into all of those traps or all of these things that not you're now approved for that you probably wasn't approved for once upon a time. And they definitely will stalk you. The more your credit score goes up, you get all kind of unsolicited mail, emails, everything. Chapter 2, interest is the price of borrowing. Interest is the price you pay to borrow money. If you borrow money from a bank, lender, credit card company, finance company, dealership, or app, there is usually a cost attached. That cost may be called interest. It may be called the finance charge. It may be hidden inside fees. It may be packaged as a monthly payment. It may feel small, but the question is always, how much will I pay back in total? And you can see the visuals in front as an example. A person may borrow $1,000, and keep in mind the dollar sign is before the digits. It's not after, for dollars and think only about the monthly payment, but the lender is thinking about the full return. You are thinking, can I afford this payment? They're thinking, how much profit will this contract produce? That is why financial literacy matters. You need to see the deal the way the lender sees the deal. Like 1,000 borrowed, and then whatever the interest is, then you end up paying 1,300. So the lender just made 1,300 off of your 1,000. Especially if you end up having to extend your loan or you have to use other things to pay your loan. Chapter 3, APR, the number people ignore. APR means annual percentage rate. It shows the yearly cost of borrowing, including interest and certain fees. A lot of people ignore APR because they only focused on the payment. But APR matters. A lower payment with a high APR can still be a bad deal. A longer loan with a lower payment can still cost more overall. A product with easy approval can come with a price that follows you for years. So when you borrow, ask, what is the APR? What is the loan term? What is the total amount financed? What is the total amount I will repay? Are there fees? Are there penalties? Can I pay it off early? What happens if I miss a payment? The payment tells you what leaves your account this month. The APR helps you understand what the loan costs your future. Chapter 4, bad credit makes borrowing expensive. Bad credit can make borrowing more expensive. That is one of the painful truths of the financial system. If your credit history shows missed payments, charge-offs, collections, high balances, repossessions, defaults, lenders may see you as higher risk. That can lead to higher interest rates, larger deposits, worse terms, or even denial. This means two people can buy the same item and pay very different total costs. One person may qualify for a reasonable rate. Another may be pushed into high interest financing. Same product, different future costs. This is why credit matters, not because your worth is your credit score. Your worth is not a number, but your credit can affect how expensive life becomes. Credit is not your value, credit is your access profile. And if that profile is damaged, systems may charge you more for the same opportunities. It's kind of like if you're looking at two cars and you see one that has damage to it and one that doesn't. If they're the exact same vehicle, one is going to have a lower price than the other one. That's how credit scores look to lenders. A lender will see a person with a certain credit score and then another one with a lower credit score. The person with the higher credit score is going to get the better deals, the lower interest rates, the all types of other deals involved because they based off credit. Credit is just really your likelihood of paying stuff on time to them. Chapter 5, predatory lending targets pressure. Predatory lending often targets people under pressure. People with bad credit, people with low savings, people with emergencies, people who feel embarrassed, people who need transportation, like those buy here, pay here lots, people who need rent money, people who are behind, people who feel like no one else will approve them. The marketing sounds comforting. No credit check, instant approval, bad credit okay, drive today, cash now, you deserve it, easy payments, low down payments. But the emotional message underneath is don't think too long, don't compare, do not read too closely, do not ask too many questions, just sign. That is why a calm mind is protection. Predatory lenders do not need you to be stupid. They need you to be desperate, tired, ashamed, excited, or rushed. Chapter 6, easy approval is not the same as a good deal. Easy approval can feel like a blessing when you have been rejected before. That's why they prey on bad credit people with bad businesses. I even see it in the real estate market now. There's real estate people who are going after people with bad credit because a lot of those houses are not even properly renovated, and they bank off the fact that if you have bad credit that you more likely don't read contracts, so you won't know your rights to be able to hold them accountable. They think that when you sign as is that you will just give up when you see issues are wrong, but actually as is in a lot of situations only includes known issues. If the person did not disclose issues to you, that can wait, that can defeat the as is waiver, because that's a whole different type of legal situation you have if someone is giving you bad product under the guise of as is, especially if they knew about it. But also to be very careful of anything that's as is, because yeah. Easy approval can feel like a blessing when you have been rejected before, but easy approval is not always kindness. Sometimes easy approval is a business model. The company may approve you because the interest rate, fees, collateral, repossession terms, or contract structure protect them more than they protect you. So when you see easy approval, do not just feel relieved. Ask questions. Why is this approval so easy? What is the APR? What is the total cost? What happens if I miss one payment? Is the product worth the loan? Is there a warranty? Is there a return policy? Is this lender regulated? Are complaints common? Can I get a better deal somewhere else? The goal is not fear, the goal is discernment. Every open door is not an opportunity. Some doors are traps with welcome mats. Slide 7, products not worth the full loan amount. One of the biggest traps right now is financing products that are not worth the full loan amount. A product may be popular today, a trend today, a status symbol today, a viral item today. But what happens when the trend dies? What happens when the resale value drops? What happens when the item breaks? What happens when the warranty is weak? What happens when the monthly payment remains but the excitement disappears? This happens with electronics, furniture, luxury accessories, shoes, beauty products, cosmetic procedures, cars, appliances, collectibles, trendy products, anything that feels urgent because everyone online is talking about it. Before financing anything, ask, will this item hold value? Will it help me earn money? Will it improve my stability? Will I still want it after the trend ends? Can I resell it? Will repairs or upkeep cost more? Luxury vehicles. Am I refinancing usefulness or attention? Because attention is a terrible asset. It expires quickly and charges interest. Not to mention, attention based off of material things means that you will always be financing because there's always going to be something new. Show me a vehicle from 30 years ago that was popular 30 years ago, and no matter where you go, it's still popular now, that people still value it the same way. When you live a life based off of what other people think and view, baby, your life is going to be filled with materials and items and confusion and debt because people don't know what they want. People let other people tell them what they want. But that's a different story. Chapter 8, novel products and trend debt. Novel products are dangerous because they create urgency. Everyone wants it. Everyone posts it. Everyone talks about it. Everyone reviews it. Everyone acts like life changed overnight. Then a few months later, no one cares. The trend moved on. The algorithm moved on. The creator moved on. The crowd. But the person who financed it is still paying. That is the problem. Trend debt is one of the quietest forms of self betrayal. You let the crowd choose the purchase. The future you pays for the crowd's short attention span. This is why social media discipline matters. If your feed keeps creating wants you did not have before, your feed is not entertainment. It is a sales environment. And if you're an adult, it's time to grow up. No offense, but it's time to grow up. If you're still into things that are trendy and unstable, that's not mature. That's very childish, especially if it's music related, sports related. Like when you're an adult, depending on what your goals are, if it's an apartment that's stable, if it's a house that's stable, if it's good credit, if you want to be a person to where when these different natural disasters that are going to be increasing, shout out to El Nino, you want to be prepared for those things and not have to panic. You should be looking into things about that, making sure you have enough water in your house. Do you know what to do when it freezes outside? Do you know what not to do with anything that has heat and fire coming from it, like candles and propane tanks? You these are the things you need to be focused on, because the internet will have you trendy and dead, because a lot of information that people miss because your content you consume is only mindless content. People are literally dying because they didn't know any better. There's so many people that don't know about how dangerous certain parts of certain cities are because they're not looking at that. They're looking at other stuff. So please open your mind up. Think about what you don't like about your life right now that you could learn to make better. Think about skills you could use. You might could be someone that could start sewing and make money from that, because a lot of people need money. But one of the biggest opportunities many people overlook right now is that fast fashion is the thing, which means that somebody with sewing skills could make a bank, make big bank, making quality clothes, and you could charge whatever you want, especially if it is something that lasts a while. Just and that's just one example. Chapter 9, the psychology of I deserve it. One phrase that gets people trapped is I deserve it. And sometimes you do. You deserve rest. You deserve beauty, safety, comfort, joy, a good life. But the question is, does this purchase bring me closer to that life or farther from it? You can deserve something and still not need to finance it today. You can deserve nice things and still choose stability first. You can deserve enjoyment and still refuse a bad loan. You can deserve comfort and still wait. The market loves when your emotions are in charge because emotional spending does not ask enough questions. So upgrade the phrase. Do not just say, I deserve it. Say, I deserve peace after I buy it too. And especially if you are looking for vehicles or housing, if it is well before the time that you plan on doing it, please use this time to learn the laws. If you stand within your city and state, find out the laws that they have for housing, for renting, like tenants' rights. Find out the different lemon laws they have for vehicles, so that in the event if you do go to a as is place, you know what your rights are. Be prepared to look up for attorneys and different things for those categories. A civil attorney for civil rights or for vehicles. Not to mention, if you are low income, you have legal aid. Every state has legal aid for low income people. So just look into things that make your life better, and don't look for people on the internet to tell you stuff. People, a lot of these pages that I see y'all get advice from, they don't know what they're talking about. They don't even do research to give you a correct answer. They give you answers from out the crack of their musty ass from situations that they have no experience on, and they're not even emotionally regulated in a lot of situations. So I wouldn't trust their advice myself, which I don't get advice. I am the advice. Thanks to me growing up around idiots, I had to learn how to find answers for myself because the adults I grew up around were dirt dumb. So that's just a habit for me to look up stuff myself naturally. But I understand that everyone didn't have people with the IQ of a cucumber raising them. So, the social pressure of spending. Social pressure is real. People may not directly tell you to spend, but the pressure is still there. Everyone has the new phone. Everyone is traveling. Everyone is dressing a certain way, even though they look a mess. Everyone is upgrading cars. Everyone is going out. Everyone is financing something. Everyone is posting, performing. And if you're trying to become financially disciplined, it can feel lonely. You may feel like the boring one, the cheap one, the one who never wants to do anything, the one who changed. But growth will change your relationship with pressure. And you also have to remember, I say this in a lot of videos, but if you're new here, you ain't heard it before. Majority always wins. If you go in a room with 20 idiots and you did research on whatever the subject is, 20 idiots is the majority. You will be the weirdo in the situation. You will be the idiot in the situation. So if you are around people who all live in financial hell and you decide to change, yes, you will be the weirdo. Does that mean you are a weirdo? No. But in their environment, you are. That's why environments matter. That is why it's a cliche about who you are around, but it is extremely important, because if you are not the Beyonce of the group, you definitely don't have no say so. So good luck with that. But growth will change your relationship with pressure. You can still love people without letting their spending habits control your life. But if you love people and these people not able to root for you regardless of what your changes are, then that's not love. You need to change your idea that you love them. You don't love them. You love the comfort that y'all had. You love the connection that y'all had. If they family, you always wanted to be friends and family so bad because it's just so nice to be friends and family. But when it comes to this life don't care about any of that. Life don't care about who your friends are. Life don't care about where you was born. The stuff that y'all want is bigger than y'all friendships and y'all families. But if you want to make your life as small as your friendship or your family, have at it. You'll be stuck. You can still be connected without being influenced. You can still show up without matching everyone's financial decisions. Good luck, because they will not make it comfortable for you. Your relationships can remain. The influence has to be reviewed, because when you making a conscious change around unconscious people, their reaction, they don't realize what's going on in their brain. Their body is seeing you as a threat because you're changing the dynamic, but them being unaware, they won't phrase it that way. They will do the typical, you acting funny, you different, you think you know everything. Oh, everything about financial literacy. That's what it is, but they don't realize that that's them feeling inferior to the fact that you're doing something that they probably wish they could have did and they never had it in them to do. And don't get it twisted. Don't think that you can pull people. Now, maybe you can. I don't know. Maybe you might be the Beyonce of the group and people really respect you and follow you. But it's not your business to make other people make responsible changes to their life. And no ultimatum you give is gonna make a person meet you where they are. They have to do that on their own. So yeah. Chapter 11. Maintain a connection, remove the influence. and this is just being me being nice by saying maintain the connection, because personally I wouldn't recommend, but I understand bias. So the fact that this is a lesson for many people, even though I'm sprinkling in my bias, I'm still giving the lesson in an unbiased manner. So don't mind my bias. This is a mature part of financial growth. You do not always have to cut people off. Sometimes the goal is not removing the person. Sometimes the goal is removing the influence. Maybe you can still talk to them, still care about them, still celebrate them, still show up when appropriate, until they start talking about financial issues that they keep having and you realize that it's them that's causing it. But you no longer let them set your financial rhythm. You no longer let their lifestyle become your standard. You no longer let their spending become your pressure. You no longer let their opinions override your plan. That is growth. Because if you remove everyone too fast, you may isolate yourself. But if you keep everyone too close, without boundaries, you may remain influenced. The balance is maintain connection where healthy, remove control where necessary. Chapter 12, the human reaction to growth. When people begin to grow, there is a natural reaction. You start learning, seeing patterns, understanding money, recognizing traps, saving, waking up. And your first reaction may be, I need to tell everyone. I need to save everyone. I need to bring my friends. I need to bring my family. I need to show them what I learned. That impulse can come from love. It can come from empathy, from excitement. It can come from wanting your people to win too. But there is a dark side. Not everyone is ready to grow. Not everyone wants correction. Not everyone wants to see the pattern. Not everyone wants to admit they were influenced. Not everyone wants to stop spending. Not everyone wants to question the lifestyle they attach their identities to. If you try to drag people into growth before they are ready, they may begin to resent you. Not to mention, if your growth leads to you having extra money, good luck if you letting people know about your extra money you have, and when they start wanting to borrow and not paying back because you the one with money now, good luck. Good luck, baby. You might want to keep that a secret. Chapter 13, the dark side of trying to take everyone with you. The dark side of trying to take everyone with you is that it can drain you. You become the teacher, the warning sign, the budget coach, the therapist, the emergency contact, the rescuer, the one explaining interest, the one explaining credit, the one explaining savings, the one explaining why the loan is bad, even though people who ask you for advice and you give all of the details, they usually just go with what they were going to do anyway, because they were really looking for you to be a yes man. People don't really be wanting you to give them advice. They be wanting you to be yes king, yes queen. Off the cliff you go, but you got wings, so you're going to fly, even though you're going to die, but fly. The one explaining why the trend is temporary. The one explaining why the car note is too high, and they still do what they want. Then come back with when the consequences arrive that create resentment. It can also slow your growth because your new life needs energy. You cannot spend all your energy trying to convince people who are still emotionally loyal to the old pattern. Share information, plant seeds, be an example, but do not turn your growth into a rescue mission. Prosperity requires boundaries, but you also have to, once you become aware, or if you're already aware, when you start dissecting yourself and your influences, you can look at other people's influences. If people have multiple influences that make them spend, social media, the music they listen to, the celebrities that they like, the different places they try to frequent in y'all city, if they like to do sections and all of this bougie oogie stuff, baby, that's deeper than rap. Good luck you being one person trying to get through all of them layers of influence that these people have, because people will say one thing and pretend that they on whatever the memes they decide to post that day and how they their own person and they do whatever. It's a lie. Chapter 14, bad credit and emotional vulnerability. Bad credit and emotional vulnerability. Bad credit can make people emotionally vulnerable. When you have been denied, ignored, embarrassed, or judged, approval can feel powerful. Someone finally says yes. A lender finally says yes. Dealership, a store, a finance company finally says yes. But the yes may be expensive. It will be. If they telling you yes when you were denied by other people, maybe rejection is protection in that standpoint. But I understand sometimes the need supersedes everything else. If you have transportation issues and you really need to keep your income going, it's understandable. So it's understandable, but for the future, you want to prevent these things in the future. Like we can't cry over the past. The past is where all of the lessons lie. But if we don't learn from the lessons in the past and we feel all that shame like a lot of people do, and some people be in denial, that's how you end up being a rerun for years. You keep repeating the same thing over and over again because you never ate it up. You gotta eat up your past. You really do, and digest it. Do not let approval make you overlook the terms. Do not let embarrassment make you sign quickly. Do not let bad credit convince you that bad terms are your only option. Sometimes the strongest move is walking away from an approval that costs too much. Every yes is not a blessing. Some yeses are chains. Savings. Chapter 15, money left on the table. Now let's talk about people who are starting to save. That is a major step. If you're a saving, celebrate that. What a clap sounds at. Media assets. It'd be taking forever to do the sound, so I just be giving up. But okay, that's enough. You are already changing your relationship with money. But once you start saving, you need to ask, is my money sitting in the right place? Many people leave money on the table because they keep all their savings in accounts that earn little or no interest. Now, safety and access matters. Your emergency fund should be easy to reach, which is liquid funds that's able to be reached. But if your savings is growing, it may be worth comparing options like high yield savings accounts, money market accounts, certificates of deposit, which certificates of deposit you agree for to hold it for a certain amount of time, and the money collect interest. And at the end of that time, you get your money back and the interest. And some people, what they do is just keep putting their money in CDs over and over again and compound the interest. Treasury bills, employer retirement accounts, credit union savings options. The point is not to rush into products you do not understand. The point is to learn that save money can have a job beyond just sitting still. And also there's a lot of reputable financial documents out there like Nerd and different things. Keep in mind though, with the commercialization of the internet, of course they're going to have people they recommend, but they do have a lot of websites that give you interest rates for the different banks and stuff like that. But I'll cover that in a different video, because I want to mention things, but I also want to double back and go deeper into things mentioned, so it goes from introduction to getting to know. Kind of like how people should meet each other, like introduction and then getting to know people, but they don't do that. They just skip introduction and then anyways. Chapter 16, liquidity matters. Before you chase a higher return, understand liquidity. Liquidity means how easily you can access your money. New word unlock, liquidity. Cash is liquid. Checking accounts are liquid. Savings accounts are usually liquid. A CD, which is a certificate of deposit, may lock money for a period of time. Investments may go up and down and may not be ideal for short-term emergencies. This matters because if your emergency fund is hard to access, it may fail during an emergency. So think in buckets. Bucket 1, money for bills and daily spending. Bucket 2, emergency and disaster fund. Bucket 3, short-term goals. Bucket 4, long-term growth. Do not put rent money in risky places. Do not put emergency money somewhere you cannot access quickly. Maximizing money is not only about return, it is about matching the money to its purpose. And then I thought about y'all too. Assets regular people can start acquiring. When people hear the word assets, they often only think rich people can participate. Real estate, stocks, businesses, large investments, but assets can start smaller. An asset is something that can hold value, grow in value, produce income, or improve your earning power. Regular people can begin with emergency savings, high yield savings, retirement accounts if available, employer 401k match, skills, certifications, tools for a trade, reliable transportation that helps earn income, a computer used for work or learning, equipment for a side business, books and courses that build earning power, a small business system, index funds or investment account once ready, a home when financially prepared. The first asset may not be flashy. The first asset may be a skill that gets you a better job. Do not underestimate that. And your local work source places has multiple grants at any given time for you to get skilled for free. They don't charge for it at the workforce place. Now, unless you know the official website, because it's different for each city and state, don't trust anything online that tell you that you need to pay for all of that stuff, unless it's a reputable source. But try through your workforce first. Chapter 18, skills and assets. Skills are assets because they can increase your earning power. A certification can become an asset. A trade skill can become an asset. Computer skills, public speaking, writing, budgeting, vehicle maintenance, cooking, emergency preparedness. A skill may not show up like money in a bank account, but it can change your access. It can help you earn more, spend less, avoid scams, fix problems, negotiate better, think clearer, create opportunities. Sometimes the first investment is not a stock. Sometimes the first investment is becoming harder to exploit. Please, because it's so easy. There's so many scams out there. Everything, little fires everywhere, or everything everywhere all at once, whatever that movie name is. Chapter 19, timing purchases saves money. Another place people leave money on the table is timing. Sometimes people pay more because they buy at the worst time. They buy when the item is trending, when demand is high, last minute, during emotional pressure, before comparing, before a newer model releases and prices drop, during panic, when social media is pushing the product hardest. Timing matters. There are times when certain items may be cheaper. Off-season clothing, holiday clearance, older phone models after new releases, furniture sales, appliances during major sales period, travel when demand is lower, vehicles when dealers have inventory pressure, school supplies after back to school season. The point is not to chase every sale. The point is to stop letting urgency choose your price. The patient buyer often pays less. Chapter 20, the asset versus liability question. Before buying or financing something, ask one powerful question. Does this build me or build me? Does it help me earn, help me save? Does it protect me? Does it teach me? Does it grow in value? Does it hold value? Does it reduce future costs? Or does it only create payments, maintenance, storage, fees, interest, and pressure? Some items are useful even if they are not assets. You need clothes, food, furniture, transportation, comfort, but you need to know what category the purchase belongs to. Do not call a liability an investment because it makes you feel better. Honesty is financial maturity. The trap of everybody has loans. One dangerous belief is everyone has loans, everyone has debt, everyone has payments, finances things, is struggling. Maybe many people do, but common does not mean healthy. High blood pressure can be common. That does not make it ideal. Stress can be common. That does not make it peace. Debt can be common. That does not make it prosperity. If everyone around you is financially exhausted, maybe the goal is not to match the group. Maybe the goal is to become the pattern breaker. That may feel lonely at first, but growth often does. If it feels lonely, it's a possibility you may still be seeking validation, and the changes that you made removes you from the sources of validation you received. Validation is cute because humans wired to have it, but you need to validate yourself first. Because until you do right by you, everything you do gonna fail. Word the color purple. That's just the easiest way I could put it. You're trying to stop repeating what keeps hurting people. That is different, because when you looking for approval from people, you find yourself thinking like them, even if you don't mean to. Like you limit your thoughts. If you trying to get approval from negative Nancy's and negative Nate's, is you missing out on so many positive opportunities around you, especially if you someone like younger me who used to tell people about different things that's coming up, and then everybody around you would just talk negatively about it until you just didn't even want to deal with it yourself. Yeah, don't do that. Chapter 22, the current climate requires discernment. In the current financial climate, people are under pressure. Prices are high, rent is high, food is high, insurance is high. Interest rates have changed the cost of borrowing. Credit card balances feel heavy. People feel behind. And when people feel behind, bad deals become easier to sell. A desperate person may not ask enough questions. A tired person may not compare. A shamed person may not seek help. A person who feels hopeless may not take any approval. That is why discernment matters. Discernment means slowing down, reading, comparing, asking, calculating, walking away, waiting, choosing stability over emotional relief. This climate requires financial sobriety, not panic, not performance sobriety, a clear mind in a noisy market. And please don't take any offers from anyone in your DMs about saving money, making money, or anything like that. Go to the source. If you want to save money, go to your local bank that if you have an account with them, and talk to a personal banker. Like, don't, these people is getting money out of people DMs and blocking them. I don't understand, but please stop. If you ever have anybody sending you any type of offer for money in the DMs or about investment, block them, get them off your page. They are a scammer. That is not real. There is no one that is wealthy that is emailing people about getting them wealthy too. Look at the patterns. People who get rich, what they do, forget about everywhere they came from, blow their money on luxury, and then be back broke again. So no. Chapter 23, prosperity for making it this far. Let me pause and say this. Prosperity to you for making it this far. Prosperity to you for even realizing something needs to change. That realization matters, and it goes a long way too. Some people are still sleepwalking through payments, financing trends, defending bad loans, confusing approval with opportunity, still confusing status with stability, still letting the group think for them, still letting the algorithm raise their cost of living. But if you are here listening, thinking, questioning, calculating, there's something in you is waking up. Do not disrespect that. Awareness is not small. Awareness is the beginning of a different life if you allow it. You may not fix everything today. You may still have debt, but you may still have bad credit. You may still have mistakes. You may still be rebuilding, but you can see, and once you can see, you can choose. Just look at debt as a fire. You now see where the fire is coming from. You haven't put the fire out yet, but you have it blocked off to where it can't burn your future. Yes, your past is on fire, but you're working on putting it out. When you get the debt down, you're putting it out, and in the future, you are still learning how to enjoy these things. Not to mention, in a society where people are overdoing spending, a lot of the things that you want today is going to end up on eBay for 80% off for people who got it when it was hot and now they don't need it anymore and they're selling it. So, yeah. But even when using eBay, make sure you know all your buyer's rights and payment protections, and use whatever you know that has secure payment methods when you buying stuff on the internet. Chapter 24, this week's action plan, which this is not this week's action plan. This is this week's action plan in this week's video, which videos be damn near every day or every other day. But this is at your own leisure. This is me giving you an idea of a generic plan. Your life is completely different from all of this stuff I mentioned. Some things may apply to you, some things may not apply to you. So what you will do with this information is just use the structure to fill in your own blanks and make your own path based off of this. And even if you don't complete it, that is fine. That is actually information, because whenever you fail at trying something, you can look at how you failed and attack that area in the future. Like if you're trying to lose weight and you see that them Snickers get to you all of the time. Okay, when you restart your plan in the future, either incorporate Snickers into your diet or find a way to remove them. Instead of looking at it as, oh, I failed, oh, I missed a day, oh, I missed $1, oh, I did this. Shut up. You're grown. Stop crying. Unless you have a therapist. Step 1, pick one debt and write down the APR, balance, payment, and payoff timeline. Step 2, pick one item you almost financed and calculate the total cost. Step 3, review your savings account and compare whether your money could earn more safely, based off the interest rate. Step 4, check your credit report. But I mean, you probably did that in the other video if you already seen the other videos, but if not, have fun. Step 5, identify one product or trend you wanted because of social pressure. I could identify a bunch of them. Polo boots, a bunch of Ralph Lauren stuff when I was younger, Rockaware, FUBU. The newest iPhone was really me because I like technology, but it didn't help. And what else? I used to want newer cars, but that was a mixture of social pressure and the fact that I had an unreliable vehicle for my first one. That's just me showing you how that would go. Step 6, identify one person or group whose habits influence your spending. Step 7, decide how to maintain the connection while removing the influence. Baby, if you're able to do that successfully, where's the hand clap? Good job. Step 8, research one asset you can realistically begin building. That asset may be a skill, a certification, a savings account, a tool, a retirement contribution, a better habit, a budget system, a debt payoff plan. Start where you are, but start with the truth. With the truth. Because the truth is between you and yourself. It's not like you have to tell me what your truth is. And even if you did, I probably wouldn't receive it the way you would assume I would receive it. I would actually probably have more understanding, but I'm not welcoming you to do that. But I definitely would be able to see the psychological aspects And I would also, depending on the way it's presented, remind you not to have shame, because what are we shaming for? Like, it's a whole bunch of other stuff that needs shame, and it's not your financial habits. Because I don't even really know how to say this without sounding conspiracy theorist, so I won't. But just know all of this stuff that is going on financially, it is by design. It is not the current billionaires that did it. It was before them, but it's by design. It's a lot of moving parts, the education system, the environments, just so many different things. So the fact that you are breaking through mass programming is amazing. It's really amazing. And that's why it's even more dangerous trying to fight with the people who still part of the mass programming. Because when it comes to unaware people, all they have is their beliefs. When you try to pick apart a belief or critique a belief, for whatever reason, unaware people body sees it as an attack on their physical body, and they react the way they do. It's like clockwork. It really is. I've had enough examples to where, unless you a spicy person and you like that kind of stuff, maybe you can still try it for fun. But baby, people get crazy for the dysfunction. I don't know what it. Well, I mean, I do know what it is, but for the sake of this video, I don't know what it is about that. And in closing, interest can build wealth or bury people. Loans can create access or steal peace. Bad credit can make life more expensive, but it does not have to redefine your future. Predatory businesses do not always look evil. They don't. They manipulate a lot of different things. That is why I preach against community thinking, because in New Orleans, a good bit of those buy here, pay here lots with those musty, rotted ass cars that they sell are black people trying to use black owned businesses. It's Middle Eastern people trying to be down with the black people, with the it's a name of a car company that they put it on the back of all their cars, and some of their letters is red, the other is black. Yeah. And those vehicles are recycled. They already repoed from other people who didn't afford the payment. That's why they make the payments so ridiculous, because they trick people into getting it. They don't trick people. They win off the fact that people think that their tax money means that that's the money they're gonna have every month, and they make financial decisions based off of that. And then when they report a car back, they literally made all of their money from the person. They're not gonna fix the car because they always sell them as is, and then the next person gonna get it. And whoever pays the full balance, they get the car, but then the people that made money off 3-4 people. So good luck. Sometimes they look convenient, sometimes they look trendy, sometimes they look like approval, like a chance, like relief. But financial literacy teaches you to look deeper. What is the APR? What is the total cost? What is the resale value? What happens when the trend ends? What happens if I miss my payment? What am I really buying? Is this item building me or billing me? Am I making this choice from peace or pressure? As you grow, remember this: you can love people without letting their habits lead you. You can maintain connections without keeping the influence. Good luck again, because these people with this social media mindset, people are more controlling than I've ever seen in my 35 years of living. People are not able to just respect differences in lives and understand, okay, I'm the friend with the bad spending, you the responsible friend, but our friendship is based off shared love for each other. So let's just focus on the shared love. No, the person with the bad habits is going to constantly remind you that you don't share their bad habits. Oh, I know you're not a drinker, but oh, I know you financially literate, but oh, I know you trying to lose weight, but oh, I know you go to the gym, but nothing, whore. Get your stupid, unmotivated ass out of my life. I don't want to hear that shit. You can maintain connections without keeping the future. You can share knowledge without turning your growth into a rescue mission. You can plant seeds without dragging people uphill. Drag their ass to the water. I'm sorry. You can become the example. If you made it this far, prosperity to you. Really, like, I really tip my hats off to you. No matter where you going, as long as you are not allowing yourself to go through what you went through before, because anything that made people go through stuff to where they feel bad about themselves is not worth you experiencing that again. Please learn from it now. And even if you have relapses, baby, sometimes it take people 4 and 5 trips to rehab to beat an addiction. So I mean, that's not telling you that you should take that much. Your goal should be less than that. But you know, I've seen worse from less, is what I'm saying. It is the beginning of power. Your future is not for sale. Do not let a lender, a trend, an algorithm, a group, I almost added something in there, or an insecurity convince you otherwise. And tell them people with the bad, with those influence people, and they influence Mo and Paul, because they probably inherited being influenced and a follower from their Mo and Paul or grandma or whoever raised they musty ass, that they have no place in your life with that. I mean, you don't tell them that, but have a good day. That's it for this video. Chapter 15 coming soon.